Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, January the 18th, 2022. The markets continue to follow through on current analysis, particularly here in the ES. We did see that third wave, and actually the 3 of 3, kick in today and move the market lower and towards that ultimate goal. Now, what really took place and what can we expect for tomorrow? Well, again, we're counting a minor third wave, which began here at 47.39. And thus far, within that minor third wave, it's going to consist of 5 waves of minute degree. So what have we done so far? Minute 1, minute 2. We're within that minute third wave. And within it, it is subdividing as it should. And it either is going to turn to a much larger move or it's going to be a little bit more compact, but still needing additional downside. So far within this third wave, I can count 1, 2, 3, 4, probably 5, maybe, or it's 1, 2, 3, 4. 1, 2, 3, 4. So I'm not sure. It still could be what it does appear that what we're going to need is likely only the interior third is done. We're going to do a fourth wave and then the fifth wave down, which I think should come down to this 45.20, but I'm still aiming for this 45.03 to complete the minor third. So this internal third, I'm thinking it should break below, actually it did break below today, below 45.72. It recovered that level and now it's heading back down towards it. So we did get a little bit of a recovery right at the start of the Globex session. And now it's beginning to sell back off again. So I'm still thinking that we're still putting the finishing touches on this internal 3 of 3. And so maybe 45.53, maybe even as low as 45.20. If not, if we get down to 45.53, and again, this all can happen overnight. We got Asia coming on in about an hour and a half, and then we have the European markets that come on during the night. And it was actually Europe that got us started on this majority of the part of the slide that we saw lower. And so I'm thinking that we need to possibly do a little bit more to complete this internal third. Then we get a minute fourth wave. So that's 4 of the minor third. And then that may bring us back towards 45.86, maybe back up to 45.93. And then we drop again. And that would be in wave 5 of 3. And so I would think that that should bring us down into these zones. Once this minor third is complete, then I'm looking for a larger fourth wave, a minor fourth wave. That'll be a very clear 3-wave structure. And so that I would be expecting to begin within this zone. And we'll be able to do Fibonacci retracements on that once we do have the low for minor 3 down and complete. So for tomorrow, I'm looking for a little bit of upside, so we might get some recovery. And the way the markets have been moving, they seem to really like to jump back in and buy things real quick. Now, we continue to have earnings that will probably keep a cap on things because thus far, from what I'm understanding, we've not really gotten anything that blowing the doors off. In fact, if I had to say it, they're blowing the doors off, but in the opposite direction. They're blowing the doors out. And so so far, this has been all very disappointing news in terms of what these individual companies are making. Today, Goldman Sachs was very disappointing, actually. and the stock ended up down over $26. So if that continues that trend, then we're likely just going to continue to see the market work its way lower. So tomorrow, upside should be limited. If we start breaking above the 20, which right now is at 4,600, and then we break above the 50, which is a 46.28, then we're into something much different than what I am looking for. And so we'd have to probably likely consider that wherever this does bottom, we get some follow through the downside, that it is likely completing the larger third. I'm not looking at that right now. I don't think the count is off. So I'm going to be looking for shallow, smaller. But even so, from this level, you're looking even up to the hourly 8. I mean, it's 14 bucks, 13, 14 bucks from where we are. And yeah, it's a decent rally. It's a decent S&P rally. Back to 45.93, you're talking $20 rally. So it's still a decent move, but not enough to really break the downward momentum right now. That's kind of what I think I'm trying to make clear. So whether this happens overnight or whether it waits until we're back online again tomorrow morning and everyone's off and trading, I do suspect that we will come down to finish, first of all, this internal third. So the minute 3, and that I'm looking for down into this area, 45.20 on the bottom. Once it breaks 45.20, whether it does it within this minute third or whether it does it in the larger minor third, that I think would then start to cap this as being the finishing point for the entire larger rallies. Then I'm going to be a little bit more comfortable in putting the primary 5 and the cycle 5 and the super cycle wave 3 above all of this. Right now, I'm just leaving it at the intermediate level. But my intent is to fill in the blanks. But I want that extra support at 45.20 to be broken. I want that extra support of the move telling me that, oh, we've now exceeded the previous 4th. So bingo, we're all done. And now we're starting to move lower in a much stronger decline. And continue to look and use the moving averages. Right now, as you can see, this is the hourly. Here is the 200, the 50, the 20, the 8, the 4. They are so lined up to continue to go down right now. So to change that, this has to break above the 8, above the 20, above the 50. And eventually it needs to get back above the 200, which is a 46.70, if it truly wants to have a good move to prove or to show that downside is done for them. I do not see that, but this is what my expectations would be should it start to happen. But I'm not looking for that. I'm looking for continued downside right now. We'll get a bounce and then an additional leg down, then a larger corrective phase in the way of a minor 4. I'm going to leave it right there, but I'll take a quick look at the daily before we call it a day here and look at where those moving averages are and what they may or may not be telling us. So again, you can see that the market came and slid below the 50. And 50 was at 46.44, so that happened picture overnight. And then it broke the 4. So you can see here as well that this is starting to line up to get a little bit more severe. Now, if we have to take a peek, that 200 is sitting down here at 43.94. Now, being that it's now closed and broke below and closed below the 50, it's not totally lined up on the daily yet. We need to get the 8. The 4 is below the 50. The 8 needs to drop below the 50. The 20 needs to drop below the 50. Then all collectively, it needs to be hard down and get itself below 43.94 to truly present us on a daily chart as large negative picture. Right now, daily negative, yes, for sure. That's what it's kind of telling us. And we can see now that the market is just about back to unchanged and it's starting to form a little bit of a negative candle. That's the follow through that we'd be looking for. But right now, this is weakness. So we have two pretty strong candles of weakness. One in intraday, where it took back the 50, got it to close above it, but that was the expiration. That did not work out so well because it came back, boom, and now we've got another weakness. So I am going to continue to look for a little bit of downside here. Get ourselves below that 45.20, give us a little confirmation that the 5 and the 5 and the 5 are all done. And we're in the beginning stages, the very beginning stages of a longer term corrective move. That's it for today. Our next update will be on Wednesday, the 19th.